In the last two videos, we saw how investing can be a way to beat inflation and that one of the safest ways to invest is with index funds. If you didn't see either of those previous two videos, then the link to them is up here. Now in this video, we're going to dive into the world of stocks and shares, ISAs, a popular investment option for those looking to grow their money in the long term. If you're a complete beginner in the world of investing, then a stocks and shares ISA can be a great place to start. So what exactly is a stocks and shares ISA? First, let's break down the acronym. ISA stands for Individual Savings Account, a type of account provided by banks and building societies that does not charge tax on any returns that you may get. There are several types of ISAs available, including cash ISAs, lifetime ISAs, and help to buy ISAs. However, for our focus today, we'll be looking specifically at stocks and shares ISA. Now, a stocks and shares ISA works by shielding any gains you make from tax. So if you see your money grow, you won't have to worry about giving any of that money back to the taxman. So that sounds great. And you might be wondering, well then, how do I get a stocks and shares ISA? So getting one is relatively easy, and many financial institutions offer them. You can approach your bank, a building society, or even an online investment platform to set one up for you. It's essential to shop around and compare fees and features to find the best option for your needs. Once you've chosen where to open up your ISA, the next step is to decide how much you want to invest. The beauty of a stocks and shares ISA is that you have flexibility in your investment choices. You can start with as little as £50 or go up to the annual ISA allowance, which is set by the government, which in the UK right now is £20,000. But don't worry, if you don't have £20,000 just sitting around, remember, you can contribute money to your ISA over time, not just in one lump sum. So if you have £100 now, you can add more whenever you have the extra funds available. The key is to be consistent with your contributions, as regular investing can help your money grow steadily over the long term. So let's assume that you have your ISA set up and you have some money in it. Well, the next step is to decide where to invest that money that's sitting within the ISA. And this is where stocks and shares come into play. Within a stocks and shares ISA, you have access to a wide range of investment options. You can choose to invest in individual stocks, just like we talked about in the previous video, or you can opt for mutual funds or exchange traded funds and index funds. And we also discussed index funds in the previous video. The key difference between these three is that mutual funds are generally run by a human being and their fees are consequently higher. The other two, exchange traded funds and index funds, are normally passively run, which means that they just passively track an index, which in many cases could be the S&P 500 or the FTSE 100 or any other index. Remember, investing in the stock market involves risks, and the value of your investments can go up and they can go down. However, by using a stocks and shares ISA, you're giving your money the potential to grow more efficiently thanks to the tax advantages. Now, it's important to note that a stocks and shares ISA is considered a long-term investment. While you can access your money if you need to, it's generally recommended to think of your ISA as a place to grow your wealth over 5 years or more. In summary, stocks and shares ISAs offer a tax-efficient way to invest your money in the stock market. They provide flexibility, allowing you to contribute regularly and invest in a variety of assets. As with any investment, it's crucial to do your research and consider your risk tolerance and financial goals before making any decisions. If you're still uncertain about where to start, then seeking advice from a financial advisor can be a wise step So if you think you've learned something, please click like and subscribe because, well, that is the end of the video.